going on, everyone? Welcome to this episode of Midcurve. Don't know what episode it is. Doesn't matter, I guess. But I'm here with a friend of mine, Mr. David Brickell, Mr. Macro himself. We used to work together at a previous employer, and that's how we met. But David, could you give us your background?
Yeah, I guess try to keep it brief. I spent 18 years macro trading and sales across investment banks. Went down the crypto rabbit hole about 10, 11 years ago, mainly as an investor. Finally took the leap to jump into crypto professionally about 4 years ago. And currently work for FRNT Financial. So I'm head of distribution there. We're essentially building an investment banking platform for crypto. So we have like a capital markets business, OTC trading, lending, borrowing, structured derivatives, treasury management, and then like a merchant bank type business. So M&A advisory, VC capital financing, and all that good stuff. So yeah, just I guess kind of bringing a lot of what I've done in the past in traditional finance and investment banking and building that out in the digital asset space.
That's perfect, because I had another person on last week that you and I both know, Mr. Gordon Grant, how'd you
bring me on after him with his mega prank?
Yeah. No, but we've both done podcasts with him in the past, both talked to him a lot. But yeah, it's the point is that, like, I think, and I talked to Gordon about this, like Solana, well, obviously, like, we're heavily in the Solana world. We're entrenched in this little bubble of ours. And what I'm interested in is bringing more TradFi people into Solana, and bringing that, like, just educating that world on like what we do and what we are. Because I feel like, and Gordon kind of said this as well, not a lot of people really even look at Solana in that world. It's still very heavily focused on Bitcoin and ETH. And I think, it's starting to move a little bit more into Solana, but still very, very early days. So I guess, like, from your perspective, why is it that institutional investors or funds or whoever are not looking at Solana right now, if they aren't?
Yeah, I just think it's like first mover advantage on maybe on the ETH side of things. So kind of Bitcoin, I guess, is the first like digital asset that everyone gets comfortable with. It's seen as a commodity. It's digital property, digital gold. And then I think for traditional investors, like the whole layer one stuff outside of Bitcoin, I think Bitcoin is easier for them to get their heads around, and then like all these sort of layer ones and what they mean is more difficult. But obviously, naturally, they start to move out of the risk curve and start to look at these other networks and tokens. And Ethereum's like still like the biggest, and so the one that they're more comfortable on. It's got the ETF and all this stuff now. So I think it's more about that than anything else. And I'm pretty sure Solana will then follow suit as the next one. And I'm sure with this, and we'll get into it, but with this new administration in the US coming in, we're probably going to get Solana ETFs, and then that starts to bring people into it. And then they, I mean, if I think of myself, if Bitcoin's the kind of the digital gold, then all the other stuff is almost, in my mind, a bit more of a kind of tech play, if you like. And then you start to sort of get into under the hood around what these different networks do, what their advantages are. So I just think maybe the traditional guys aren't there yet, but as they'll continue to start moving further out the risk curve and try and think of ways of valuing these tokens and these networks. And I'm sure Solana won't be far behind where he is.
Exactly. I kind of have the same view. But for those of you who don't know, David is obsessed with the macro, right? Like anytime we talk, even when we were hanging out in Portugal that year, it was like the conversation always comes back to macro, and I appreciate that about you. And that's why I wanted to bring you on today, is like, like, yes, I want to get an idea of like, what it's going to take for the institutional player to start focusing on Solana and looking for yield in the Solana ecosystem. But also, like, something massive just happened, maybe last week or whenever it was. But there's a new administration coming in that seems to be a little more friendly to our industry, right? And so
Yeah.
I wanted to get your thoughts on that first. Let's start there. What do you think happens over these next couple of years?
I mean, I think it's huge. It's huge in that I kind of don't think like the US or any government can stop Bitcoin and crypto. They can only kind of slow it and get in the way. And certainly we've had, I guess, quite an abrasive administration for the past 4 years that have done a really good job of getting in the way. So clearly now there's an openness, sort of seeing talk about how Lutnick being Treasury Secretary and all this stuff. So the guys going in there are very sort of pro crypto, pro Bitcoin. So I think we're going to see less of people getting in the way. How much they like really push the agenda and kind of sort out. I mean, everyone's crying out for a clear regulatory framework. How much they push that is yet to be seen. But I think the openness is there. I think certainly for traditional investors and businesses who have been looking at the space, it's reduced a lot of career risk now. And I think, there's so much fear around, even if you're trying to act in the best way possible, Gensler's just going to come after you and take you to court. He's going to be gone, whether he goes his own or whether Trump fires him. So I think we're now going to have this open approach to crypto. Trump seems to understand the importance of it. Obviously, Musk and his kind of involvement, they kind of get the need for it. And it's still an if, but I just it feels like there's a higher probability than others think. If we get a Bitcoin as a strategic reserve in the US, I mean, that's just going to be, that's just massive, right? But that's a complete game changer for the price of Bitcoin for a start. I mean, I think, in my head, that brings $1 million into play within the next few years, because, all sort of major economies and are going to have to kind of strategically follow suit and start adding Bitcoin to their strategic reserves. And that demand shock to the system is going to be huge. And then we know that all then filters down to everything else. So but I think we were kind of moving in a good direction in a way. I think this just accelerates that. And one of the things that's interesting to me, Justin, is the conversations I was having before the election was there's a lot of people now that kind of get crypto and understand it. Everyone wants the regulatory framework so that they know what they can and can't do within the space. But the one thing that quite a few sort of traditional guys that were maybe kicking the tires around this space said to me was, if Trump gets in, kind of a game changer. So I just feel like now that's going to unleash a flood of capital into this space. People that maybe weren't sure about, do we invest? And I think now that will actually unleash a lot of that capital, and we're going to start to see the industry really start to motor. If we've been in a bull market clearly in price for some time now, but the actual industry itself, if you look at volumes on exchanges and all this stuff, we've still been mired in a bear market really since FTX. I think now we really start to see the industry sort of take off, and that's going to benefit everyone.
Yep. No, 100% agree. And we've already kind of seen it, right? Like stocks and crypto, things further out the risk curve, have already been ripping. I did see, I think the 10-year, did that dropped to 4.3 today? Maybe that was yesterday. Dollar index softened a bit.
Yeah, I mean the macro itself has actually been a bit of a headwind, in terms of stronger dollar, higher yields, all playing this Trump trade and what that means. So that's something that actually is, in some ways, has been a slight concern, I guess. But I think, Yeah, and I think right now it's the narrative shift around crypto is sort of too powerful in terms of the demand and the flows that's bringing in. I also think as well, like the market's generally under positions, not just Bitcoin, and but risk generally. So a lot of money was on the sidelines, just waiting for this election to be out of the way. And I think that money's got to come in, like both into equity markets and into Bitcoin and broader crypto. So I kind of feel like pullbacks will be pretty shallow because people want to buy the dip. I think pain is higher, and I think you kind of seen it over this past week. Like, some of the price action, people being forced to chase this now because I think they're underperforming benchmarks and all that sort of stuff. So I think there's more money's come into it. The macro generally supportive in terms of we're still in this global rate cutting cycle. I don't think the Fed are going to slow up as much as people seem to think. Jay Powell's already said that they can't start deciding policy on what Trump may or may not do. So they're going to have to react to the lag data, and I still think that lag data will show a slowing, not collapsing kind of US economy. I still think inflation's kind of done. Everyone's, this week's kind of getting a little bit, anxious around, are we starting to see a re-acceleration in inflation? I don't think that. I think what we're seeing is, the Biden administration spent a lot of money into this election, and we're probably seeing a little bit of a pickup from that. But I still think that inflation's kind of okay. Fed are comfortable with that. I think the Fed are more worried about what's going on in the labour market. Don't forget the last non-farm payrolls was like 12K. So there's clearly sort of weakness there in the labour market. Again, nothing at the moment that says it's collapsing, but given where rates are, where nominal rates are, where real rates are, I think the Fed want to get back to something what they consider sort of neutral, and that's probably about 3.5% in nominal rates. So I think the Fed are going to cut. Liquidity's picking up. It's all good.
Let's dig into that for a second, right? CPI came in a little hot, right, or a little bit ahead of where they expected, or above what they expected, but they had already cut rates. You're saying that lagging data will show that like CPI or like inflation will stay pretty much where it's at, right? And people are expecting rate cuts coming in 2025 with the terminal rate approaching 3.5, right?
Yeah, and like the Fed themselves have said, they expect the disinflation trend to be bumpy. I mean, we've had pretty much for the last year just a one way. If you look at headline inflation, pretty much a one way kind of fall in inflation. We had, if you remember, earlier in the year, again things looked like we kind of flatlined, and things looked like they might be picking up again, and then we had another leg lower. So I think we're just back in this like sort of bumpy part where we might have a few higher prints on inflation. The last bit's the most difficult. But if I look at China, like China's emitting a huge disinflationary pulse across the world. We've got a global slowdown. Oil's still trading on the back foot. Oil's down like 12% year on year. So I don't really see any huge like inflationary like pulse right now. Now, what Trump comes and does, that's another question for us to worry about maybe into next year. Tariffs and I mean, people say about the spending, the US are running 7% deficits, wartime level deficits as it is. So I don't know if Trump really impacts that too much. And then like with tariffs, there's huge offsets. If you see China, sort of debasing their currency, devaluing their currency, and let's say it's Trump, right? All of this is a negotiation. So that's probably not going to be, be as bad as we thought either. So, I still think we, as things stand, we have to look at this as we're in a rate cutting cycle, still global slowdown. Global liquidity is picking up, and the liquidity cycle is picking up. So there's still a really good tailwind for crypto, and I think that runs into like Q2 of next year. Reason I picked that period is because we have all the debt ceiling issues as we go into January, which I don't think are going to get resolved as we go into this transition of power. So they're going to have to run down the Treasury General account, which is essentially the Treasury's account, the cash account at the Fed. So they're going to have to spend that money, which is like a big injection of cash. So there's going to be like 750 odd billion to come into the market to kick off Q1. So I think we can enjoy the pump, well into next year.
Yep. So just to reiterate here, we are, and like to bring this around for people who aren't into the macro, and make it a little bit easier to understand.
Sorry about that.
What David is saying is it's good for crypto. No. So we have an inflation that's basically going to stay the same. We are in a rate cutting cycle. Rate cutting means the Fed is lowering the rate to borrow money, which means, liquidity, easier borrowing, et cetera. A lot of that money ends up flowing into risk assets, correct?
Yeah.
And so over the next year or whatever, we're going to see this huge injection, and for other reasons as well, we're going to see the huge injection of liquidity coming into the market. And like I said, a lot of times that flows into risk assets, meaning crypto. So not financial advice here. I would never be so bold as to give financial advice on this podcast, but most of my trading over the years has been informed by just watching the Fed rate. And it did very well. Like when the Fed started just slashing rates during the whole COVID thing. I mean, there were other factors involved, but that was a good time, right? A good time to be long crypto.
Yeah. I mean, I say to people, like, if I want to be really simplistic about things, like a pretty good strategy would be when the Fed are cutting rates or they're going into a rate cutting cycle, then you want to be long crypto and risk generally. And then the moment they start talking about, when we get to the end of that and they start talking about rate hikes, that's probably where you're going to have a pretty tough year like we saw in 22. And we are, this is a saying I've said to you a few times, you're probably bored of hearing it, but we're a function of rates and liquidity now in these markets, particularly post sort of Lehman's and the 2008 financial crisis and all that stuff. They pumped it up. They pumped the assets up. That was the collateral that underpinned the financial system, right? So since then, liquidity and rates kind of dictate everything. Right now we're in an environment that liquidity is still rising. We're close to the start of a rate cutting cycle than the end. So I think the macro at least is going to be sort of quite supportive for crypto and risk generally.
Yep. Perfect. Thank you. I love having you on just to reaffirm my bullishness.
Your bullishness. Joe's going to be funny, Justin. Like, at some point that macro dynamic is going to shit. I mean, I've been bullish, right, for a couple of years, I'd say, since post FTX. I felt that was like the final kind of dump, and liquidity side all that picking up, but I keep saying people are going to get really worried when I start turning bearish, but we're not there yet. We've got a lot of good fun to be had before.
That's right.
That space.
That's right. I love David the Perma Bull. I don't want to ever see David the Bear. When you turn bearish, we're no longer friends. Let's just put it that way.
Well, the funny thing is, obviously, I mean, like cryptos, like 80 vol asset class, the drawdowns are huge. We all know that. The funny thing, though, particularly when it comes to other, like, equities and stuff, I typically say to people that the hardest trade in the world is to be short assets. Because we have a system that's really designed for assets to go up, and we do have this continual currency debasement story. So everything in dollar terms is going to go up over time, and the periods where that doesn't work tend to be quite small. And I joke with people, when you get it right and you nail it, they make Hollywood films about it. Like, so, but most of the time bears aren't making money, and it's quite boring just watching this market go up. But that is a function of currency debasement. And the way the system works, and also, like, society generally does improve and expand, and look at tech. We're in this secular tech trend, so that overlays everything. Whether you're looking at the Solana network or anything else, it's like, the network effects and all that stuff. Like, it's just huge. So without the macro, these are huge stories and secular trends that we should be following in a way, and they're going to do well on their own. And then they get this kind of added kicker with the macro and liquidity and debasement and all that stuff. So that's why I'm always pretty bullish, and it's hard to be too bearish for too long.
you're bullish humanity. You're bullish humanity is what you are.
Yeah. I think naturally we tend to improve on things, and things get better, not worse.
That's right.
And because technology is at the heart of that, right? So
Yep.
yeah.
Exactly. Sir, I think we're coming up on time here. I love having you on, just again to reinforce my my bullish my bull view. Now I'm even more bulled up. Need to go buy some more crypto. But I appreciate your time, and I think we'll end this one here. We should do it again soon, though.
Yeah, absolutely. No, great to be on. Thanks for having me on. Appreciate it.